Let's take the next one, Cyient. In fact, I would like to take a fundamental and technical view on this one, just as an exception to the rule, because it's really getting battered in trade today, 18%. And this is the outlook, if I remember correctly, is not good for the current financial year. We've got Sumesh from Kerala who's bought at levels of 1,760, and so that's turning out to be elevated levels. Asa, you've probably seen the earnings snapshot and also the commentary from the management. What would you do with this?
Yes, when management, first of all, the CEO resignation was there. And secondly, even the management has cut down their revenue guidance. So definitely, I mean, hammering from the all sides. And that's why we are seeing the stock declining towards the southward direction. What we believe that in such a scenario, one can, in fact, make a strategy. One can want to take risk, then they can remain invested. Otherwise, partially exit is what we are recommending on this counter, because ultimately when the cut in the guidance is there, definitely it shows that the revenue and the profitability will not be that strong in the coming quarters as well. So we are not very much positive on this counter, recommending a exit, or if anyone cannot take the risk, then partially exit. So this is what we are recommending for this counter. We are not recommending hold on this counter.
So it's a sell, unfortunately, and I'm so sorry, Sumesh. We wanted to take this yesterday, unfortunately couldn't. But then the best advice possible at this juncture, Kushal, it's a sell on the fundamentals. What's the best level? At this level, would you say is an exit?
It's definitely exit. I mean, looking at the price action just from April, I mean, it confirms the distribution pattern with a breakdown today. And again, it comes with the highest volume recorded for the year. So that's quite some heavy selling pressure going on. So my sense is to just avoid exit positions at the current market price.
Okay. Apologies. We've got, okay, so clear exit on both sides, technical and fundamental. Bear that in mind if you hold Cyient right now. Zenith is calling us from Bengaluru. I love your name, Zenith. Please go ahead. What's your question?
Thank you, and good morning to everybody.
Good morning.
I'm holding Angel One share, 145 shares at the price of 2813.
Okay.
And I'd like to know whether I can keep it as a core portfolio stock, because, after recent quarterly update, it went in a downward trajectory. However, all the fundamentals checks perfectly. I think it just comes second to grow in terms of active user base, which is 76 lakh and 5 crore plus downloads. Only Grow has more than this. And it has a very good rating as well of 4.4 across 14 lakh reviewers. And all the fundamentals looks good, ROC, ROE, and the management commentary also looks promising that they are going to invest more into AI to make it more robust. I know there's, due to SEBI guidelines, we see some, corrections. But how far will it go, and whether I can blindly keep it?
You shouldn't blindly
Not literally.
You shouldn't blindly keep anything.
Though.
Yeah, I got it. You shouldn't blindly keep anything. But Zenith, it's clear that you've done your research, and it's a fair question to ask. But perhaps, just like Asta was saying earlier, it's a question of valuations. Asta, you spoke about the capital market plays and the fact that some of these are taking a bit of a battering. Angel One, what Zenith's saying is absolutely right. They've made very big strides in getting customers, and they've moved to that platform fee-based model, right, or fixed fee-based model, which seems to have done particularly well for them on the fundamentals. But would you hold this in your core portfolio?
So I would like to hold it in the core portfolio, but here one should remain, very much, vigilant of the fact that 1 or 2 quarters is it's a minimum time, frame for which this counter can be kept, because we are expecting, and in fact, management has also said in its guidance that they really want to wait for 1 or 2 or more quarters. Although whatever fixed expenses this company has to take, they have already taken care. So I think 6 months down the line, definitely whatever steps they have taken, that will start yielding in the results. And on the same side, we are expecting that in fact H2 of the calendar year 25 will be a better one for the capital markets. So all in all, yes, one can keep the stock in the portfolio, but here the time frame should be more than 6 months.